Amazon made $11 billion in profit in 2018. Their tax bill was $0. They actually got $129 million back from the government. I'm going to explain exactly how that happened, and I promise by the end of this video it'll make complete sense. Okay, let's start from the very beginning. When a company makes money, the government takes a cut. That cut is called corporate tax. In the US, that rate is 21%. So if Amazon makes $11 billion, they should owe around $2.3 billion in taxes, right? But here's the thing. The government doesn't tax your total earnings. They tax something called your taxable income. And taxable income is what's left after you subtract your expenses. Think of it like this. Say you earn $5,000 a month, but you spend $3,000 on rent, food, transport. The government doesn't tax you on the full $5,000. They tax you on what you actually kept, which is $2,000. Same idea for companies. Amazon can subtract certain costs from their income before calculating what they owe in tax. Those subtractions are called deductions. And the more deductions you have, the less tax you pay. Amazon had a lot of deductions. First strategy, paying employees in stock. So most of us get paid in cash. Your salary hits your bank account every month. Simple. But big companies like Amazon often pay their employees, especially senior ones, partly in stock. Meaning, instead of giving you $1 million in cash, they give you $1 million worth of Amazon shares. Now here's where it gets interesting. When Amazon gives out that stock, the IRS treats it as a business expense, same as if they paid cash, which means Amazon gets to subtract that amount from their taxable income. So Amazon gives out $1 billion worth of stock to employees. They deduct $1 billion from their income. Their taxable income drops by $1 billion. And here's the crazy part. Amazon didn't actually spend any cash. They just created shares and handed them out, but they still get to count it as an expense. In 2018, they used this to deduct over $1.1 billion. Completely legal, written right into the tax code. Second strategy. This one's called depreciation, and it sounds complicated, but it's actually pretty simple. Say you buy a car for $10,000 to use for your business. That car is going to last maybe 5 years before it's worn out. So the government lets you deduct $2,000 a year for 5 years. You're basically spreading the cost over the life of the asset. That's normal depreciation. Now Amazon builds warehouses, data centers, delivery infrastructure. They spend billions on this stuff every year. Normally, they'd have to spread those deductions out over 20 or 30 years. But Congress introduced a rule called bonus depreciation. And this rule says, for certain types of assets, you can deduct the full cost in year one, not spread over 30 years. All of it, right now. So Amazon builds a $5 billion data center. Under normal rules, they deduct maybe $150 million a year for 30 years. Under bonus depreciation, they deduct the full $5 billion immediately. That wipes out an enormous chunk of their taxable income in one go. And Amazon never stops building. So they do this every single year. New warehouses, new data centers, new equipment. Full deduction every time. Third strategy, tax credits. Now, a credit is different from a deduction. Let me explain the difference. A deduction reduces your income before tax is calculated. So a $1 million deduction might save you $210,000 in tax, 21% of $1 million. A credit is better. A credit directly reduces your actual tax bill, dollar for dollar. So a $1 million credit saves you exactly $1 million in tax. The government offers credits to encourage companies to do certain things. Research and development, renewable energy, creating jobs in low-income areas. Amazon qualifies for a lot of these. They do massive amounts of research, building Alexa, developing AWS, working on drone delivery. That gets them R&D credits. They have solar farms and renewable energy projects. That gets them energy credits. They have hundreds of warehouses and fulfillment centers in areas where the government wants job creation. That gets them jobs credits. In 2018, Amazon claimed over $400 million in tax credits. So let's add this all up. Amazon starts with $11 billion in profit. They owe 21% of that in tax, which is $2.3 billion. Then they apply their deductions: stock compensation, bonus depreciation, other business expenses. Their taxable income drops significantly. Then they apply their tax credits. Over $400 million knocked straight off the bill. By the end of all that, their $2.3 billion tax bill is gone, and they actually get $129 million back from the government. Now you might be thinking, okay, but this is just Amazon. Surely most companies pay their taxes properly. They don't. Apple does this. Google does this. Nike, Netflix. Pretty much every major corporation does some version of exactly what I just described. These rules didn't appear by accident. Companies spent years lobbying Congress to write them into the tax code. Bonus depreciation was pushed by real estate and manufacturing industries. R&D credits were pushed by tech companies. The rules got created specifically so these companies could use them. Amazon didn't cheat. They didn't find some hidden trick. They just hired very good accountants who know exactly how to use the rules that were written for them. So that's it. 3 strategies. All public information. All sitting in Amazon's own tax filings that anyone can look up. The system isn't broken. It's just designed in a way that benefits people who can afford to understand it.